Ladies and gentlemen, it is Mr. Boyle coming to you on Friday, March 27th to talk to you one more day about the New Deal. Well, we're going to talk again about the New Deal on Monday, but we're going to wrap up our relief, recovery, reform stuff today. So our focus today is going to be on how the New Deal addressed the banking crisis. So you guys know that the New Deal was Franklin Delano Roosevelt's plan to fix the Great Depression. FDR's plan, we have talked about it as centering on having three major components. Plans, programs, rules, and laws that encouraged relief for helping people who were suffering during the Great Depression. We talked about the New Deal in terms of how it helped the short-term economy recover and start to grow again. And then yesterday we talked about how the New Deal tried to reform the American economy so that it was a more fair economy and so that there wouldn't be another Great Depression. I have been telling you throughout the week that we are going to talk about the banking crisis today. And that's because, when we talk about the New Deal, these three R's, the relief, recovery, and reform, you guys probably have noticed that relief, recovery, and reform a lot of times overlapped. Like the Works Progress Administration provided relief because it hired people to do work, but it also helped the economy recover because these people who were being hired to do jobs around the United States had money that they could spend that would help the economy recover. And they also built things that the American economy needed, like roads, bridges, and tunnels. The Civilian Conservation Corps sort of did the same thing. It hired people to work. It gave them a place to stay each night and food to eat. That provided them with some relief. And then it also sort of helped the economy recover by lowering unemployment and getting people money to spend. It's important to know that a lot of the programs you're going to notice overlap between the relief, the recovery, and the reform. Like Social Security, the SSA it gave direct relief, unemployment insurance to people who needed it. It also reformed the economy by providing unemployment insurance for later generations, something that still exists today, as well as old age pensions, so that to reduce poverty amongst the oldest Americans in the United States. Again, there's a lot of overlap amongst the three programs, and it's not like the United States government or FDR or the New Deal came out early on and put in place a lot of relief programs, and then later on put in place recovery programs, and then later on put in place reform programs. All of this was happening at the same time. And the best example of that is how the New Deal addressed the banking crisis. So we talked about the banking crisis very early on in this unit on the Great Depression. Some background, you guys know that banks hold people's money. Banks give people's money out to people and businesses in the form of loans. That's how banks make money. Normally, this system works totally fine because most people pay off their loans, they make their payments on time, and then banks have all the money they need for their customers because customers don't need to take it all out at once. However, during the Great Depression, there were some serious problems with this system. All at once, a lot of people couldn't pay back their loans because they were laid off. After the stock market crashed, businesses laid off workers. So lots of people who needed money from the banks, and they went to take money out all at once. But at the same time, because people lost their money in the stock market crash, a lot of people who bought on margin couldn't pay off their loans. So you had a lot of banks who didn't have the money for their customers when they needed it. And that caused a bank failure. When a bank fails, when a bank doesn't have the money to meet a customer's request for the money they put in that bank. And when a bank doesn't have money and a bank fails, anybody who had an account in that bank lost everything. And that's what made the Great Depression so incredibly serious, is that ties back into our cartoon with our friend the squirrel, even people who did everything right and had nothing to do with the unstable economy of the 20s or over speculation in the stock market, they lost everything and they ended up homeless or suffering in some way, shape, or form. That's what made the Great Depression so incredibly awful. And so it was really important early in the New Deal to fix this so that banks wouldn't fail anymore. So it's like probably the first, maybe exaggerating a little bit, but I think it's the first thing that Roosevelt and his administration dealt with when they took over when his administration took over in March of 1933. So the first thing they did was close banks for 4 days. Nobody could go into the bank and take money out of the bank. Nobody could go into a bank and put money into the bank. They were closed for business, basically. That provided relief to banks, right? We know that a lot of the banks didn't have money for their customers, and the last thing that they could afford to do, these banks, was to withstand lots of people rushing to them demanding their money. That would almost certainly cause more bank failures, and it would be really bad for the American economy. It'd be bad for the banks, it'd be bad for the economy. So the first thing Roosevelt did is he ordered all banks to be closed, and Congress then passed the Emergency Banking Relief Act. And the purpose of the Emergency Banking Relief Act, there's a lot of different things that the Emergency Banking Relief Act did. One of the first things it did is the government went into all of the banks across the United States, and over the course of the 4 days that they were closed, they inspected the banks to see whether or not they were solvent, whether they could continue with their business. As soon as a bank passed the inspection and demonstrated that it had the funds to stay open, the bank could reopen. Most banks, the government found, over the course of the 4-day closure period, were totally fine and could continue to operate as needed. There were a percentage of banks, a small number of them, that needed help to reorganize with the government's help, which the Emergency Banking Relief Act provided. Help for banks to reorganize so that they could support their customers. And then there were a number of banks that couldn't continue on and had to close. The Emergency Banking Relief Act also gave the power to the government to issue emergency currency. So we know that when banks failed before, people lost their money and the United States went into a deflationary cycle. The Emergency Banking Relief Act stopped that. And then finally, after the bank holiday had been put in place and the Emergency Banking Relief Act had been passed, Franklin Delano Roosevelt went on the radio March 12, 1933, and gave the first of his fireside chats. And they're called fireside chats because Roosevelt would go on the radio, and he said he was sitting in front of his fireplace, and he would tell the American public all about what he and his administration were doing to fix the Great Depression. And in this first fireside chat, Roosevelt told people about the bank holiday, the Emergency Banking Relief Act, and what his government inspections had found about the banks. And he could confidently tell Americans, you can put your money in the banks and it'll be fine. You should put your money in the banks, is what he told Americans in that first fireside chat. So the next morning, before banks opened, there were a lot of banks had lines around the corner of customers waiting to go in. But instead of customers waiting to go in to take out their money, panicking, they went with money to put back into the banks. And that shored up the banking system. It made it so that the American banking system could continue to operate as it did before the Great Depression, that it could take in people's money and then it could loan out money to people and businesses that needed it. And that was a really big help to the American economy. Later, the Glass-Steagall Act was passed in June of 1933, so a few months later, and the Glass-Steagall Act made a number of important reforms to the banking system so that it would work better for most Americans. The most important thing that the Glass-Steagall Act did was create the Federal Deposit Insurance Corporation. The FDIC, as it's commonly known, insures money in banks. It's through taxes and that banks have to pay to the government. But today, if a bank fails, if you have up to $250,000, that bank will be protected and you will not lose it. We can go to this website here and we can see that there have been a number of banks that have failed across in the United States in the last 10 years. Most recently, on Valentine's Day, February 14, 2020, the Erickson State Bank of Nebraska failed, and the FDIC stepped in and made sure that all of its customers got their money so that it wasn't lost like it was during the Great Depression. And we can go back through, you can go through this list if you want. You can see that the FDIC has 560 banks that have failed since October 1st, 2000. A lot of the banks failed between 2009 and 2012. That's when you'll notice that there are a lot of these failures. And that time period in American economic history is called the Great Recession. Unemployment in the United States reached 10% as there was this global financial crisis. what's crazy to imagine is that it could have been way, way, way worse if it wasn't for the FDIC basically resupplying billions of dollars to Americans who had money in these banks that failed, so that money wasn't lost from the American economy, and that if those people needed money that were in any of these banks that failed, they could get it. So that's how the New Deal addressed the banking crisis. You've got 2 laws and the bank holiday plus a fireside chat. Fireside chats were given throughout his presidency, but those 4 things helped the banking, give relief to the banking system, helped the banking system recover, and then reformed it so that it's just a better system overall for Americans across the United States. That's going to be it for this week. I've got a couple questions for you guys to answer and then a survey to do about how this has been going so far. I hope things are going well. I want you to know that I don't like any of you, but I do really miss being in school and seeing you all at least for a few minutes each day. And I hope that you and your families are doing well. And we'll continue talking about all of this next week.